Four stocks I'm buying, May 2024 edition. Welcome in, folks. This is my favorite video I do on this channel each and every month. We're about to go into four stocks that I'm buying in the upcoming month. We're going to go into details on why I'm buying these stocks. What type of upside do I see for these stocks? What type of risks do I see for these stocks? Those sorts of things. And I wanted to focus in around four stocks here today because I feel like the last few months I've done a lot of stocks. Like last month was 7 stocks. This month's or a few months ago was 5 stocks, right? And so I thought this month, let me just focus in and go a little more in depth on these four particular stocks here today, okay? I want to get straight into this, guys, so let's just get business out of the way. I need every single person watching this video right now. If you enjoy these videos I do for you each month, smash that thumbs up button. I should see 100% of people watching this video smash that thumbs up button. It helps us out tremendously, guys. It's all I ask for you in return. If you need access to all my best course curriculums, teaching you everything I got up here in this bald head, then check out the pinned comment down there, fill out an application. We'll see if we can get you in there either next week or the week after in my private group to get access to all my course curriculums, take you up to a much higher level. And you get access also not only to my course curriculums, but my Discord chat as well with the private group members, which we have so many people that have 6 figures, 7 figures, 8 figures in that particular group. And we have huge communities for a lot of these stocks out there. So yeah, that'll be pinned comment down there. All right. All right, guys. So first stock up here of the bunch is Nike, NKE. I have bought this stock aggressively here recently. When I say recently, over the past, I would say month or two, and planning to continue to add to this one very aggressively. Now, don't let the 5-year stock performance of this one fool you. Okay, the stock has done pretty much absolutely nothing the last 5 years. It's up 10%, which in the market over the last 5 years, if you're up 10%, that's like doing nothing, right? The next 5 years, I think the stock's going to over 2x, and I do believe this stock will significantly outperform the S&P 500 over the next 5 years. I think it's going to do very well. Now, let me break it down to you like this, okay? What about a freak like me, okay? A freak like me, and I was thinking about how many shoes and cleats and things like that have I owned over the years, and I was really thinking about that in depth, right? And I was kind of thinking about this over the years. I've been on this earth for 34 years, and I was thinking I've owned easily over 100 pairs of shoes, cleats, those sorts of things over the years, right? And then I was thinking about how many of those particular products, whether it was, sandals or shoes or track spikes or football cleats or whatever, how many of those were Nike? And I estimate 75% plus of what I've worn in this 34 years on this earth were Nike branded. And I was thinking about, man, that's like the greatest subscription business model maybe in history, right? Where basically year in and year out, you go and you buy new shoes. And, a lot of folks go obviously to buy new Nike shoes overall, right? Now, my wife and I were having an interesting discussion last night, right? And we were talking about like shoes we wore over the years, and we were talking about like, oh, remember, this brand, that brand. My wife was like, oh, in middle school I was wearing these, in high school I was wearing these, right? And we were just talking about like different brands over time, and we were kind of like, oh, I wonder what happened to that brand. Like, are they still around nowadays? And she would like go on Google and like find the website or whatever I was driving, and it was interesting because at the end of the day, we found there's all these brands we might have worn over the years, but at the end of the day, the only one that stayed relevant over time was Nike. That was the only one. Everybody else ended up falling by the wayside, and they either faced bankruptcy or they got bought out by some other brand, and it just went into irrelevancy. And it was really fascinating when you've been on this earth for a while and you've been able to see brands come and go, and you're like, oh, remember I like 20 years ago I was rocking that brand, and then like they're just irrelevant, right? And so if you think about Nike, decade after decade, generation after generation, Nike gets more and more relevant, and they're really the only company in this space that's been able to do that, right? If you think about Under Armour stock is down since the company went public, 84 percentage points. Is Under Armour relevant in 10 years? I don't know. Maybe they are. Maybe they're not. I just don't know. I'm like, maybe not. I don't know how relevant they'll be in 10 years, just to be quite honest. Hoka, they've been a hot brand last couple of years. Are they relevant in 10 years? Maybe not. It's a real question mark, right? That's another one that's kind of like Hoka, where it's been really hot last couple of years. Are they relevant in 10 years? Maybe not. I think it's a real question mark. Allbirds was so hot, such a hot brand for, really the past, I would say 7, 8 years. And that company's nearly facing bankruptcy now at this point in time. The stock price is all the way down to 61 cents, right? And I say all that to, at the end of the day, like all these brands come and go. They might be hot for a minute, and then all of a sudden their relevancy fades. And at the end of the day, you ask me, will Nike's brand be relevant in 10 years? And I say, absolutely. There's no question in my mind. Every other brand I could ever think of, even Lululemon for that matter, and Lululemon's been tremendous in what they've built over the last decade, right? Even Lululemon, I'm like, are they going to be that relevant in 10 years? I don't know. Nike's the only one that I can say with complete conviction they'll be extremely relevant in the future, right? They were super relevant in the Michael Jordan era of the late 80s, early 90s. They were super relevant in the Fresh Prince of Bel-Air days back in the mid 90s, right? They were so relevant back in the Tiger Woods days around 2000 when he was on top of the game and, he was one of the biggest athletes in the world. They were on top of the game in the LeBron days. They signed him from the go out of high school back in like 2003, right? They were relevant in the Ronaldo era, and now they signed Caitlin Clark to a big deal, right? Which this is a fascinating deal because this was by far and away the biggest shoe deal that any female basketball player's ever gotten. From my understanding, it's not even remotely close. But a lot of people feel like Nike stole her because it's an 8-year deal for $28 million, but based upon the ratings of her games and how big of an athlete name she's become, people feel like Nike stole her. Like people are making like strong arguments about like this is like a crazy deal for Nike in the end, right? And so Nike just stays relevant generation after generation, decade after decade, and there's no question about that. Now, there's also something very big happening here, okay? This matters significantly the financials of Nike moving forward. Nike's going to cut about $2 billion in cost out of the business over the next couple of years here, okay? Now, it's not a small number. That's a substantial number. So Nike's going to basically lean out the business, lean out the organization, and what you're going to likely see from Nike over the next couple years is their margins go up quite considerably. Now, the gross margin can go up because they've been able to kind of lean out inventory. They put themselves in a lot better inventory position to take pricing, okay, and sell at full price. So that's going to help out their gross margins, but you'll see that net margin likely increase because they're going to cut so many costs out of the business over this next couple of years here. So if you look at Nike's annual net income loss over the last over decade, right? We can see 2 billion, 2 billion, 2.4 billion, 2.6 billion, 3.2 billion there in 2015, 3.7 billion, 4.2 billion. 2018 was a kind of a rough restructuring year for the company, 1.9 billion, 4 billion, 2.5 billion in the Rona year, right? And then 5.7 billion, 6 billion, 5 billion, right? My opinion is based upon the cost cuts I see and based upon kind of where I see revenue trending over the next few years. I believe 2025, they're going to have record all-time high net income. I'm looking at $7 to $8 billion of net income for Nike in the year 2025. Now, for Nike overall, if we look at like the next decade, if I'm looking at 2025 through 2035, I believe this company is going to be able to, on bad years, pull in at least $7 billion in net income a year, and on good years, great years, like $11 billion. So I'm looking at a business I'm paying about $142 billion for. They're likely going to be able to bring down share count over the coming years because I'll likely do big buybacks in the future, okay? And I'm looking at a business that I think is going to be able to pull in minimum $7 billion to $11 billion of net income per year from 2025 to 2035. And so overall, that makes it a very great value as a stock to be buying at this point in time, and especially when you consider the safety of the business model, the relevancy, and those sorts of things, right? Now, if we go to 1000xstocks.com, right, we can take a peek at their dividend yield. It's over 1.5% here. And okay, I'm buying Nike stock today, getting a 1.5% dividend yield on the stocks I'm buying, right? But Nike's going to likely up that dividend in the future years, right? As their net income increases over the future years, they're likely going to up that dividend. And so their shares I own that I'm buying right now at a 1.5% yield, but don't be surprised if eventually that's a 2% yield, 3%, 4%, 5%, right? And so it's a play on share price appreciation. Like I said, I expect the stock to 2x or more over the next 5 years. But on top of that, I'm getting those dividends and that cash flow as well. Now, one of the things I love about 1000xstocks.com is I put it so you can compare several stocks together, right? And I want to compare them against maybe their toughest competitor in the market, which is Deckers, okay? And they're the ones that own Hoka and many other brands. And if we compare them versus Deckers, this gets really fascinating, okay? Forward PE, Nike is a little bit lower, right? But look at the gross margins of Nike versus Deckers, and look at the net margins of Nike versus Deckers. I believe you're going to see Nike over the next couple of years get to gross margins much more in line with Deckers, and you're going to see their net margins not get quite to level Deckers is at. And the reason I don't think it's going to quite get there is Nike spends so much on athletes to make sure that brand is insanely relevant generation after generation, decade after decade, right? Deckers doesn't do that. And so I don't know if Nike's net margins will ever get quite to that level Deckers is at, but there's a lot of room for expansion there. And so therefore, when I look at Nike stock, I see a stock that has tremendous several years to go in the future in terms of gross margin expansion and net margin expansion, which is going to be very, very exciting. Now, the question is, when will I stop buying Nike? This stock would need to go up a minimum of 25 percentage points for me to stop buying Nike stock. And I mean a minimum of 25 percentage points from here. So we can call it, this stock would need to go to at least 120, 125 for me to say, okay, you know what, I'm good with what I have. So I got some time to continue to load up on shares week after week of Nike. I really like this one overall. It's a great value dividend play, and I think it's going to do me tremendous over the coming years. Next one up here, stock number 2 of these 4 stocks is Tesla, my Esla. Tesla, my Esla. Oh, yeah. Obviously, the stock has been tremendous the past 5 years. It has been tremendously bad the past 3 years. So we got a stock that has been absolutely unbelievably great since it went IPO. Absolutely unbelievably great for the last 10 years. Absolutely unbelievably great for the last 5 years. And absolutely unbelievably horrible for the last 3 years, okay? So it's a really, really fascinating stock overall, and obviously one of the most controversial stocks in the world. Now, when it comes to Tesla, you got to think to the future in regards to stock. You can't just buy it for whatever is going on in the business model today. It's not the way a stock like Tesla works. And that's why people that don't really like to look out to the future don't like Tesla stock, because you have to be willing to make projections and think about where things are at 3 years from now, 5 years from now, 7 years from now, 10 years from now. And that's a hard thing for a lot of people to do, because you're imagining things to happen and exist that are not really going on today, right? Now, I'll put it to you like this, okay? Let me ask you a few questions. And if you answer these questions certain ways, you can't own Tesla stock. If you do answer these questions certain ways, then you can own Tesla stock. So the first question I'd ask, in 10 years from now, if somebody goes to buy a new vehicle, here's the question. Are they going to buy an ICE vehicle, internal combustion engine, basically the same vehicles that have been sold for the last 50, 60, 70 years at this point in time? Are they going to buy a partial ICE vehicle, so one that has an internal combustion engine in it, but maybe it has a battery as well, maybe it's some sort of hybrid or something like that, right? Or are they going to buy an electric vehicle? If you think people are going to buy an ICE or even a partial ICE, I don't think in 10 years from now, if you think the masses are still doing that, I don't think you can own Tesla stock. I really don't. If you are convinced EVs will be the main vehicle people go to buy when they go to buy a new vehicle 10 years from now, then it can make a lot of sense, right? And, one of the things that gives me a lot of conviction around EVs isn't just thinking about the future and electric vehicles being a better driving performance, being, a lot easier and just to maintain and all those sorts of things. I even put it to you very, very simply. The cost curve on EVs is insane. You can now lease a Model 3, brand new Model 3 from Tesla for $299 a month, arguably the best car in the world. There's really nothing I would take over a Model 3 other than a Model S. And I've experienced, you could give me the pick of any car in the world, and I'd want Model S first, and then the second would be Model 3, and then I don't even know what I'd want third. And those are just clear favorites, right? And you can lease that car for $299 a month. Now, here's a situation. That's come down so immensely over the years, right? If you think about internal combustion engines, the cost of those just continues to climb year after year after year. And it's really just, there's no end in sight. So you have EVs dropping in price massively, internal combustion engine vehicles getting so much more expensive, and the main thing you put into an internal combustion engine, which is gasoline, continues to get more and more expensive over time. You want to see a chart of gas prices over time in the United States? Here you go. Look at that chart of gas prices. Now keep this in mind. This is very important. Gas prices could likely get much more expensive in the future. And the reason being is we're going into a much more unstable world, geopolitical environments. We see a lot more countries having problems with other countries, and that creates instability in the energy markets. which then can cause, obviously, gasoline prices to rise quite considerably. We also know a lot of the biggest Western governments are kind of a little bit anti old fossil fuels, and so there could be more regulations coming. There could be limits on how much fracking can be done and those sorts of things. And so don't be surprised if gas prices continue to climb substantially over the next 5 to 10 years. A little food for thought in regards to that. Next question I have to ask somebody is, in 10 years from now, if somebody goes to buy a new vehicle, will they expect that vehicle to be able to drive itself? If the answer is yes, then Tesla's set up pretty good for that. If you think people still aren't going to care about the vehicle being able to drive itself in 10 years from now if they go buy a new vehicle, then I don't know if you can own Tesla, just to be quite honest, right? And we're thinking about, can the car drive itself in 10 years from now? I have a vehicle in the garage right now that I can put in that maps, any location I want to go, somebody's house, a restaurant, a store, whatever, and the car will drive me right to where I want to go. Will it do it as good as I could do it? No. Will it do it better than a lot of drivers? Yes. Yes. I can do that today. I'm not talking about 3 years from now. I'm not talking 5 years from now. I'm not talking 7 years from now or 10 years from now. Today I can do that. And so it's hard for me to imagine a world where in 10 years from now, people aren't going to expect the vehicle to drive itself, when literally today in 2024, like, I'm already getting used to the expectation of that car being able to drive me if I wanted to drive me somewhere, right? That's a little food for thought in regards to that. Now, let me ask you another question. Will sustainable energy get much bigger over the next 10 years, right? So we're talking solar, battery storage, all those sorts of things. Is the answer yes or no? I think the answer should be yes. Sustainable energy will become much bigger over the next 10 years than it's been over the last 10 years, right? And so if that's the situation, guess what? Tesla's set up very, very well for that, right? Here's the deal. Tesla's a leader in, obviously, EVs. They got, number one selling vehicle in almost every major market you'd want to have the number one selling vehicle. And their market share in EVs is ridiculous, even though the competition came. And what's it added up to, right? They're the company that is the true FSD leader in terms of full self-driving, right? And when I say true FSD, you have other companies that are competing, the Waymos and a few other companies that have these huge rigs on the vehicles, and these vehicles can cost upwards of $200,000 to drive people around. Tesla's true FSD. Like, any environment, it doesn't have to be just a city that has everything perfect and has the LiDAR and the vehicles cost $200,000 plus. I'm talking true FSD, okay? In my opinion, they're the leader there, and I haven't seen anybody that's even remotely close. And then in terms of sustainable energy, they're also a leader there. So you're getting a leader in all those markets that are going to become likely much more massive in the future than they are today. Now, the next question you have to ask yourself, okay, they're leaders in, let's say, EVs. Let's say you believe all this, it's pretty data driven, but whatever, okay? Let's say you believe all this, EVs, true FSD, sustainable energy, they're leaders. The next question you have to ask yourself, can they keep being a leader? It's a very key question, because it's one thing if a company's a leader now and then they fall apart, but can they stay being a leader? Well, today you have to look at the leadership, and you got to say, is the leadership in place that got the company to this place? Now, there's two core key people in regards to Tesla that have really built the company. There's so many people, and I know some of these people, that have been helpers to build this company into what it is. But there's two core people, okay? These are the two people. One is Elon Musk, obviously, and the other gentleman is this man right here, Franz, who joined Tesla back in 2008. And it's still one of the greatest grabs in the history of business, in my opinion, in terms of Elon Musk grabbing Franz. These two gentlemen are still at the company. They're still full go. They're still incredibly excited, if not more excited than they've ever been, about where the future is of the company and those sorts of things. And so I feel like with those two in position, with those two still hungry, with those two actually still very young in the realm of business, I feel very comfortable about where Tesla's 10, 20-year future is going in the future, with the two main big dogs that have really been the game changers of this company still there at the company, right? And I told you guys this in the past. I really look at those two as kind of like I looked at Steve Jobs and Johnny Ive back in the Apple days, right? Of the heyday of Apple, and what they built with iPhone and iPad and Apple Watch and AirPods and the Mac business and everything. Those two really, they were the two key people. There were so many people at Apple that helped the company get to that place, but they were the two real key people that made this whole thing into what it is today. And so Tesla still has those two guys, and that just makes me feel very, very comfortable. Now you can look at Tesla, right? 1000xstocks.com, which by the way, we're at about 300 and I think there's about 320 people on the wait list to get into 1000xstocks.com. If you want to join the wait list for 1000x, go to 1000xstocks.com and you can join the wait list on there. We're letting in a few people a week right now. So anybody that's getting let into 1000x, congrats to you guys. It's a way you can see everything laid out exactly how I like it as far as the numbers go, the valuations, comparing stocks versus each other, listen to conference calls. It's like everything I wanted in a service, I'm putting all in this service. It's absolutely phenomenal. So you look at the stock, it's at a 61 forward P, and you might say, that's high. That's high, right? Here's the deal, okay? Tesla's going through an extraordinary time right now where their margins have gotten destroyed and the profitability's gotten destroyed in the short term. I don't believe that is lasting. I believe this is a short-term phenomenon of Tesla's margins going down and down and down, and their net income going down, their profitability, their earnings per share. I do not believe that's lasting. I believe it is what's going on now. I believe they will overcome that, and I believe if we look out into the future, Tesla's net income and their earnings per share and their margins will be substantially higher years from now than where it is going to be in 2024. And so that's where, once again, you got to kind of look out to the future and say, the short term is what the short term is. I'm focused on the long term here, okay? And so that's where I put Tesla overall. Now, in regards to Tesla, obviously I have 1,700 shares in the public account here for this one, up $239,000 on an investment that cost me $46,000. I'm probably underweight Tesla. I should own more shares, just to be quite frank. I should own more. I am buying the stock actively right now, and I want to continue to buy the stock. For instance, in my Patreon portfolio, which I started back in 2023, right? Tesla's now up to my second biggest position, just like Tesla's my second biggest position in the public account. So it's just a little food for thought in regards to that one. I love Tesla. Alrighty, third one of these four stocks. By the way, I call this house the house Tesla built for a reason. It was a game changer stock for me in the past, and I think it's going to be a pretty dang good stock for me in the future. I don't know if it's going to build me another house necessarily, like it did, but back in the day, I had a lot more money invested in Tesla. I mean, at the peak, Tesla back in the day, I don't think people knew. But I think I had millions invested in Tesla. I don't think people really knew how much I had invested in Tesla back in the day. Anyways, that's subject for another day. Alrighty, third of these four stocks, there's a brand new stock that I'm looking to buy. It is Whirlpool Corporation. So Whirlpool, likely going to be a new buy for me in the month of May of 2024. Stock's done horrible the past 5 years. It's been about 29-30%. And I actually look at this stock as a beaten down dog stock that I think has a very, very good 2025 and beyond. This is going to be a bad year for the company, okay? 2024, I'm not buying the stock because what's going on in 2024. I'm buying the stock for 2025 and beyond, okay? Here's the deal. The housing market, I don't think people really get and really understand how bad the housing market is right now. We're going through historically the worst housing market in history, and I don't think people really realize that. If you look at where existing home sales have been for really the past year and a half at this point in time, we can call it about the last year and a half, we've gotten to numbers lower than when we had the lockdowns during Rona. How's that even possible? People weren't even going to homes during the lockdowns. I don't even know how that's flipping flapjack impossible. It must have been deals that were kind of going through before and they just happened to close during that time. That's insane to think about. The numbers have gotten worse than that, okay? If we look at a 10-year chart, you can see how brutal things have been for really the past year and a half at this point in time, and how low the numbers have been for existing home sales. It's awful. And you look, we're way lower than where we were 10 years ago. 10 years ago, the United States had 20 million less people. Let that sink in for a moment. 20 million less people back then, and there were way more homes being sold. That's fascinating. Check this out here. This is even crazier, right? This is way crazier. We're at numbers, right, for the past year and a half roughly, that we were back in the mid-90s. Now, in the mid-90s, we had about 80 million less people live in the United States of America than today. Let this sink in for a moment. We're at numbers lower with an extra 80 million people here. Like, it's hard to even wrap your brain around what I just wrote you through there. Like, that's ridiculous to think about. Check this out. We've had numbers recently lower than we were at in the late 70s for existing home sales. In the late 70s, we had 120 million less people living in the United States of America than today. Like, those numbers I just ran you through are mind-blowing. That speaks volumes to how historically awful this housing market crash we're going through right now is. Now, do the prices reflect like what happened in the great financial crisis where you saw prices fall in 20, 30, 40, 50% in some markets? No. But in terms of the amount of sales, it reflects it 100%. Crazy. Now, the reason this has really happened is because mortgage rates have jumped to the highest they've been in 20 plus years now at this point in time. 20 plus years, folks. Highest mortgage rates. If you go back to, let's say, the 1980s and you look at where mortgage rates were, you'd be like, oh, mortgage rates are cheap compared to where they were back in the 80s. The problem is, like, a lot of people that were buying homes back in the 80s are dead now, or they're very elderly people, okay? So whatever was going on back in the 80s is completely irrelevant to today's housing market, because the people that were buying homes back in the 80s, like I said, they're not here anymore, or they're elderly people that might own their homes straight up as baby boomers or something like that, right? So it's completely irrelevant to go back to the 80s and be like, well, mortgage rate. It's really about what are people used to paying for the last 20 years, and this is the highest by far. And if you look at the past 15 years, it's extraordinarily high. And so you just can't get people to really buy homes right now until these mortgage rates drop, which we need yields to go down. We need the Fed to start lowering rates. And so that's a whole situation. It will play out. It's not playing out right now, but it will play out, right? Now, in regards to Whirlpool, right? $400 million-ish they're going to likely save from what I saw. They're going to eliminate about 1,000 salaried positions as part of their global transformation. So there's going to be big cost cutting, and it's what you have to do as a company like Whirlpool. Like, if this is what you're having to deal with, this sort of housing market, at the end of the day, these sorts of things, they sell appliances, right? Fridges and freezers and dishwashers and, laundry-related things, right? Like, all those sorts of products, they are the type of things that sell when people are moving. Like, that's when business is really good. And so they have to make a cut like this, and they're going to make that cut, and it's going to save the company, obviously, tremendous amounts of money. Now, if you look at Whirlpool's latest income statement, it's trash. It's an F grade. Net sales down, but it's not down that crazy year over year, so that's somewhat of a good news. But at the end of the day, gross margin down to $642 million from $763 million. It's nothing good here. There's nothing good in regards to their income statement. But it's a short-term phenomenon, in my opinion. I do not believe that we're going to be at these sorts of home sale numbers forever and ever. I do not believe that is sustainable long-term. I believe that is a short-term phenomenon that's going on right now, right? And will continue to go on for much of this year. Now, if you look at their balance sheet overall, it's not the best balance sheet, that's for dang sure. And it's also not the worst. They have cash and cash equivalents about $1.2 billion. I do think they should completely cut that div to just make sure the business is in a good position short-term. Total current assets, $6.1 billion versus total current liability, $6.5 billion. So that's one trouble spot I see with the company. Overall, I do not like it ever if there's more current liabilities than current assets for a company, right? So here's the deal with Whirlpool, okay? It's a very attractive risk-reward profile. And the reason being is in Whirlpool, in decent good times, you're looking at this company in, $827 million net income, $650 million, $783 million, $888 million, $1.1 billion, $1 billion, $1.7 billion in net income, right? This is what Whirlpool can do in normal good real estate times, not in a trash real estate market like we're in right now, right? And so I'm looking at Whirlpool, it's about a $5 billion market cap or so, right? And I'm also thinking about stockholder equity on this company, about $2.6 billion. And I'm looking and I'm saying it looks like a pretty darn attractive risk reward. And I just have to be willing to get through this bad real estate year that this year will be in terms of existing home sales. And then I think brighter days are ahead. They're going to do their cost cutting, right? And I think the company will be positioned pretty well for 2025 and beyond overall. So yeah, Whirlpool, here's the deal though. I'll probably slowly start to build out this position over the next 1 to 2 years. I'll likely start my position at some point here in May, right? And then I'll just continue to kind of add to it over time. Hopefully the stock continues to get hit in the short term, right? I don't think housing numbers are going to be good anytime soon. I think with mortgage rates up here, I think they're going to continue to be trash. And so there's a good probability that Whirlpool could push lower in the very short term. But I believe at some point in time this year, Wall Street will start to come into this stock. And the reason being is they'll kind of look at it from existing home sales standpoint of like it's going to pick up in 2025 and then probably pick up for years to go in the future. And that's even if you get an unemployment recession somewhere in the next few years. Even if we get an unemployment-related recession in the next few years, you could still likely see existing home sales get better and better and better over the coming years, which is going to be an interesting phenomenon because I don't think anybody's prepared for what will happen in that whole situation, okay? All right, so that's stock number 3 of 4. What about stock number 4 of 4? Woo, baby. This one's interesting. FuboTV, by far and away the cheapest stock of the bunch, $1.39 stock. Here today, it's a little guy of the bunch. Stock's up about 22% in the past year. It's a $400 million market cap on this one. Fubo's a lottery ticket stock. It's the best way I can put it. It's a lottery ticket stock. 2 years from now, the stock's probably 10x or more the price that it is today, or it's probably $0. That's the type of company Fubo is. Now, they could also get bought out. I think it would be an attractive buyout candidate for many different companies that are looking to add a streaming player out there, right? But you look at Fubo overall, everything in their business is going better and better and better. This is their latest quarter they had reported, 28% revenues up year over year. If you look at their net loss, they brought that down by 26 percentage points. Net loss margin, they improved that by 1,272 basis points. Adjusted EBITDA, they improved that by 33%. Adjusted EBITDA margin, they improved that by 1,126 basis points. Look at subscribers in North America, which is their main market, right? They increased that 12% year over year. They increased revenue 29% year over year, and they increased ARPU, average revenue per user, 15% per year, right? The rest of the world is kind of like, who cares? I think they should honestly probably get out of that business, in my personal opinion. They gave a guidance for $1.5 billion to $1.52 billion of revenue, which is a solid number for this year. And once again, this is like a $400 million market cap on this, so you're looking at a price to sales ratio based upon this year of about 3.5. You're looking at a price to sales ratio of about 0.3 or somewhere around there, right? Which is just like hard to even wrap your head around, like for a growing company like this. Now, they are reporting earnings up here coming, and we need to get clarity on the lawsuit situation. They are going after Disney and a few other companies. If the legal expense isn't looking too high there, the stock could print like a $2 number in terms of stock price end of the week. If it is some huge number, then we'll probably be stuck around this dollar range for a while. So we're going to get some clarity on that, I'm hoping, and that should be tremendous to get some clarity around that because that's what's freaking everybody out in the short term. Hope you guys enjoyed this beast of a video here today. Appreciate y'all joining me. Appreciate y'all being subscribed. Smash that thumbs up button. Also, if you're looking to apply to join a private group, then pin comment down there, fill out an application. We'll see if we can get you in there at the end of this week or maybe next week. Access to the Discord chat, access to all my best course curriculums, teaching you everything I got up in this bald head. Much love and have a great day.